I'd like to address my first question to both of gentlemen. The bailout has clearly been a massive financial expense for taxpayers. Since March, the Fed and Treasury have lent, invested, and guaranteed over $1 trillion to shore up the financial system. And you can see it there. Capital Purchase Program, $290 billion. Fed credit line to facilitate J.P. Morgan purchase of Bear Stearns, $30 billion, and the list goes on and on and on. Unfortunately, much of this money has found its way to large corporations, including J.P. Morgan, General Electric, Goldman Sachs, and has not yet made its way to small businesses, homeowners, or consumers. Starting with Assistant Secretary Ramanathan, why has this massive bailout expense failed to reach Main Street?
Thank you, Chairwoman Velasquez. I'd be happy to answer that question. Let me step back and take a moment. Over the last 53 business days, we have seen Federal Home Loan Bank, Fannie Mae, Freddie Mac come under tremendous pressure, and we have stabilized them. We've seen Lehman Brothers go under. We've seen AIG have considerable strains affected it. We've seen Merrill Lynch sold. We've seen Goldman Sachs and Morgan Stanley turned into bank holding companies. We've seen a tremendous shift in the financial markets. Moreover, banks in the UK, Ireland, and France have also had considerable fails. So this wasn't a local issue, it's fully global. The effects of these have had tremendous strains on small business. Let me start with what happened in September, October when markets froze. Commercial paper, which is the lifeblood of business, both small and large, froze. Companies like Dana Corp in Toledo, or Goodyear in Akron, Deere in Illinois, or Tribune in Chicago, all had difficulty and all drew on their bank lines.
Those are all big businesses. Can
Big
you talk
businesses.
to me about small businesses?
Absolutely. But all these businesses are supported by many, many, many suppliers who are small businesses. So a failure in one of these companies or an inability to finance themselves would have had tremendous impacts across the system. Interbank lending ceased. Banks didn't trust each other. They were concerned about credit quality. Money market funds. A run on a money market fund caused tremendous panic across the markets. And without halting that, we could have seen potential issues across the markets. Corporate credit issuance ceased. And
Can you talk to me about a specific action taken by Treasury targeting small businesses?
Absolutely. Let me mention our capital purchase program, in which we are investing capital in big banks, as well as small banks and community banks. Our first 9 banks that we invested in composed 55% of all deposits in the United States. As Governor Crosser mentioned, 65% of small businesses get their funds from large commercial banks and other depository institutions. We opened our capital purchase program on Monday to private companies, privately held banks. We currently have over 1,000 applications from privately held banks who loan in their private districts. In terms of small firms, I would have gone to a bank in Mountain First Bank in Hendersonville, for example, where we lended $200 million, which will be lending to the local community.
How much money do you have, a number as to how much money has been provided in credits to those small businesses? Because you mentioned that these big businesses and these big banks provide funding money for small banks or small businesses.
Yes.
48% of small businesses get their financing from small community banks that have $1 billion and less in assets.
Yes.
Until very recently, the Treasury has excluded most of these banks from participating in the Capital Purchase Program, which provides equity injection. This leaves only $60 billion left from the first installment of the TARP for the nearly 6,000 banks that were initially denied access. So are you concerned that there is not enough money, funds for these institutions?
As you recall, there are 8,400 eligible institutions, financial institutions. 1,800 are public, 3,400 are privately held, 2,500 are S-Corp, and about 625 are mutual corporations. We began this program, this legislation, on October 1st when we were granted authority. We went out to the market on October 14th with applications, and on November 14th, we closed the first batch. We tried to build the core of the 9 biggest banks with 55% of deposits initially to ensure that there was a strong financial base. Just Monday, we opened the capital purchase program to thousands of banks, local and community. We have been funding them actively, and we believe there's tremendous amount of TARP capital left for these institutions. We look forward to them and encourage them to apply, and it's not on a first-come, first-served basis.
My question is, the $60 billion that are left, that will deal with the 6,000 small banks that are out there, plus everything else, do you think that that will be enough?
We believe that is enough.
So you're telling us today that that will be sufficient money to deal with all the banks that are out there that has not gotten any help to this point, up to this point, and that we are going to get credit going, trickling down to small businesses.
And what I would say to that is this. Banks can apply through their regulator, their federal regulator, the OTS, the OCC, the FDIC, or the Federal Reserve. There's a process which they go through. And if they are approved by the regulators, it comes to Treasury for our decision to provide capital or not. We look forward to providing capital to these institutions which are viable and which make a tremendous impact in local communities. One of the items to note is every dollar that's invested in these local community banks go a much further way in providing lending to smaller.
So why are you waiting so long? Because let me tell you something, you know, we all know that in order to stabilize our economy and to get this economy growing, what do we need to do? Create jobs. It's not JP Morgan or Merrill Lynch or none of the big corporations the one creating jobs. Small businesses are the one. They should have been the first one to get the financial support and the money, the capital infusion that they needed. Mr. Krosner, last month we held a hearing with several small business owners in this committee. They discussed that the Treasury and Fed's action were not reaching Main Street America. In fact, if you take today's papers, any paper, you're going to see stories there about small businesses complaining that they cannot get the credit that they need, the capital that they need. So one business that was here testifying, which has survived the Great Depression, announced that it was closing its door altogether because of the inability to secure financing. We keep hearing how the Fed and Treasury's actions are working, but why then are so many small businesses unable to secure the capital they need to survive? Sir, time is running out for them. What are you telling them?
This is very, very important because the economy is facing significant challenges. Small business and large business are facing a much lower demand than they have in the past. We've seen the economy does not have the robustness that it has had in the past. That means that demand is much lower for the goods and services that are produced by the nation's workforce and by the nation's both small and large businesses. And so it is extremely important that we try to make sure that creditworthy borrowers still have access to credit. And this is one of the reasons why we very much look carefully at the surveys from senior loan officers asking about the changes in credit terms to small and large business. As I mentioned, significant increases in tightening or increases in the standards and terms. We asked for about small business versus large business. It's been happening, as I had noted, for both small and large business. This is a real challenge for businesses to get credit in these difficult times. And so it's very important for us to work to make sure that credit is available. And I think a number of the actions that we've undertaken to try to provide confidence to the banking system generally and provide greater liquidity to that system will help to make the banks more stable and more able to lend.